It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today, we're taking a look at business strategies of two companies in the tech realm. I'm here with Threadneedle Ventures founder Ann Barry. Ann, good to see you. Thanks for being here. So let's get to your buy stock first of all here. And we are looking at Palo Alto Networks. And this company, it's up over the last year, although it's had a little bit of volatility, as we can see from this chart. Cybersecurity has been a really interesting space, and we've seen some sort of volatility within it as well. Let's talk about platformization. I even have trouble saying this word, platformization, which I started seeing a lot more in the discussions of companies like Palo Alto and CrowdStrike. What does this mean?
Yeah, it's a lot of syllables to say. Small businesses, enterprises want to buy their cybersecurity solutions from one place, from one company. Right now, historically, businesses have had to go out and put a hodgepodge of different pieces of the elements of cybersecurity together. And they're saying, you know what, it's really inefficient, it creates vulnerability. We want to go to one place. And Palo Alto has really been leaning into being a solutions provider, hitting on a lot of those different vertical solutions.
Well, that explained it better than any of the companies that I heard themselves discussing it. Palo Alto's also been winning big contracts from big companies.
Yeah. Big ones recently. United Healthcare was a big one that got announced. A big strategic relationship announced also recently, Julie, with IBM. And what Palo Alto is going to be doing is providing a lot of the cloud and cybersecurity solutions that IBM is going to its consulting clients and saying, look, this is the go-to place to come to. So that was a big one from a go-to-market perspective.
And then finally, also, there's the free cash flow that we are seeing at the company that it could potentially be growing.
Yes, I love this. You and I talked about this a lot. I'm a free cash flow girl. 37% free cash flow margin for Palo Alto Networks. That's right now. That's before they continue to see some of the efficiencies. They're very focused on cost. A lot of the young businesses, the startups, the growing companies I speak to, if they could pick their acquirer, they'd like to be bought by Palo Alto Networks, and these guys have got the cash and it's growing.
So you think if they're going out there to make acquisitions, it's going to be of technology, it's going to be of startups rather than a big sort of acquisition?
I think so. I think that actually if you look at value creation over time, finding homes, finding tuck-ins where you can really get synergies without the risk that comes from doing a big merger of equals or consuming a massive acquisition with a potential clash of cultures. I think Palo Alto is going to be able to get some chunky, some sizable acquisitions, but nothing that's too big to swallow.
And that way you add to the functionality of that big platform as well.
Filling in those gaps.
We like to talk about the risks potentially here. And, they're spending money, they're being aggressive. What are the sort of downsides of that?
Well, this one is one where you have to believe in execution. You've got to believe you've got leadership setting clear goals, holding their teams accountable, and making sure that they're super focused on how they're actually doing what they say they're going to do. It sounds simple, it's very hard to do in practice. In this case, Palo Alto has been going after a really bold, I think, strategy to get market share. They've been going to some big potential clients and saying, if you are using an existing alternative provider, we will onboard you and take you on for a couple of months for free so that you're not double spending, as long as that is an incentive for you to move over. That's pretty bold. It means a couple of losses on some of those accounts as they win them, but it's working at the moment. It has to continue for the share price to keep heading upwards and to the right.
All right, and before we head to your goodbye, the stock you don't like, do you hold Palo Alto?
I do hold Palo Alto, and I've been adding that share price you had at the beginning. When you've seen those dips, I've been going back in.
Oh, interesting. All right, let's get to the stock you're avoiding, and that is PayPal. And you're not alone in avoiding this one. The stock is down over the past year, but let's get to why you're avoiding it here. Well, Palo Alto has that bold strategy. You don't think PayPal has it.
Here's the thread. Both of them are execution plays. I'll come back to that. But this is also about PayPal. When you take a big step back, this is a business that touches 25% of global e-commerce. I look at that and say, this thing should be winning. It should be winning on data aggregation. It should be winning in AI applications. It should be winning in gaining share and cross-selling. This new CEO has now been in the seat about 9 months. I've been waiting to hear, here's the big, bold vision that we've got. Palo Alto Networks, crickets, haven't heard it yet.
Yeah, I mean, part of that, I guess, is a go-to-market strategy. Now, we've been talking a lot about go-to-market strategies with these enterprise players. Basically, what it means is a sales strategy.
Correct.
How do we get our product out there to more people and sell more stuff?
That's exactly right. And so what PayPal has been doing is moving the deck chairs a little bit. They've said that we're going to go after market verticals. We're going to stop selling on a product-by-product basis and selling on a solutions basis to the different user bases. But again, if it's not going behind a big strategy, what you're doing feels a little bit like tweaking around the edges, and I haven't seen really groundbreaking results coming out of these tactics so far.
Well, and to your point, PayPal is enormous. I mean, I can't tell you how many times I click on that checkout using
Right,
PayPal.
exactly.
But if they don't do these other things,
Yeah.
maybe that market share dominance will not last.
Well, I think that's right, Julie. And also, this is one where I've looked at the rise and rise of Stripe, for example. I've looked at the rise and rise of the BNPL players like Affirm, Afterpay, Klarna. And I look at that and I sort of want to tear my hair out because I'm like, where's PayPal? Right? They had the first mover advantage to be able to take what are products. What I've just said, Affirm, Afterpay, those were products. They didn't have to become enterprises. Had PayPal got its act together and gone after it, and it didn't. So I'm concerned about market share.
And then on the flip side, what could work for PayPal? I guess, to put it simply, is if they start doing all this stuff that you're talking about.
Well, exactly. So Alex Chris, again, I have deep respect for him. He got into the seat 4 months ago. He went on TV and he said, we're going to shock the world. Right, we've got this great start with this huge amount of penetration. We're going to shock the world. Well, I'm ready to be shocked. Let's see it.
Yeah, it still didn't. He then came out with I don't even remember what the announcement was.
That's innovation. I don't really remember.
Right, exactly. That's the point.
There's a shrug. There's a bit of a shrug when it comes to some of the PayPal innovation, and I'm ready to be shocked, even if it's got risk. Right, I like the fact that Palo Alto Networks says risk to the strategy, but at least it's got one.
Yeah, they're taking that risk. Any position in PayPal one way or the other?
I sold out, so
Okay.
my money's been doing what I'm saying, Julie.
Okay. And good to see you. Thanks for coming
for having
in.
me.
And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes next week at 3:30 p.m. Eastern.